truth.
Yo, good morning, everyone, and welcome to the Morning Market Report. It's Tuesday. What's today's date? I think it's 20th. Yeah, May 20th. May 20th on Tuesday. We're live here at the Piper Academy, guys, bringing you guys the economic data that you guys need to know, the headlines, everything. I'm sorry I was gone yesterday. Had to get a trailer hitch hooked up to my car so I could back up the truck to buy some more crypto. Check it out, guys. We got a little bit of a mixed market here on the daily. Looking at the hourly, we are seeing a little bit more red today. We're in a range. Where's that range at? It's right here, the platinum pocket. It's beneath this 105 level. We're at 104.3. But I do have to say, guys, there's something going on. There's something going on. There's something happening here. We are above my golden pocket range bottom, and we have closed a candle on it. Now we are retesting and trying to hold it. Guys, this is the opportunity that what I was talking about that Bitcoin needed to do. Break up in there, show some support, and continue up so that we could see that possible $167,000 Bitcoin. And I do think that is all coming. But we do have some headlines today saying, hey, be aware, be prepared. We're going to talk about those. We're going to look at these charts. We're going to talk about what you can expect today in the markets and break it all down for you. Why? Because knowledge is profit, guys. And we're going to give you guys that knowledge. Let's go ahead and get it. You guys know what time it is. Go ahead and take your seats. Everybody take your seats. Good? Good? Cool. See you on the other side. Class in session. Cool. What is up, everybody? Welcome to the Morning Market Report. Did you guys say you're getting an echo? Is there an echo? Dylan VA says there's an echo. I don't know. Is there an echo? Let me know in the chat, guys. But right now, don't get confused here. All the sexiness that you're getting ready to see, we're not twins at all. One of us has gray hair, and one of us has none. So what's up there, OC? How you doing today, man?
I'm doing fantastic. Such a great day. I mean, today's a chilly morning based on what we've been around here. Yesterday we were hitting 43, 45 Celsius. That is very, very hot. And man, well, today we are around 27 degrees Celsius. So it's a beautiful morning.
Awesome. Yeah, it's hot here in the desert. I'm trying to get the hell out of the desert, man. Look, 7 days, we start the Bitcoin conference. I cannot wait to go out there and see all my peoples, okay? Then 2 weeks after that, from today, I go and close on my house and get the hell out of El Paso. So I can't wait. But the people that I'd never ever want to leave, they're right here in between us. What's up? Right there. What's up, everybody in the chat right now? Appreciate seeing you guys all here. Looks like we got Shemetrix Shake. How you doing? Shemetrisa. I'm sorry if I butchered that. Shemetrice. I think that's it. Shout out to you. I see you there. Zen Regen, Wayne C, Alexander G, the Mod Queen, Steve Hickey in the house with the Sid Piper. Let's go. And OC in the house. We got Crypto Coin Mindset, Keith in here, RS Miller, Dylan VA, Muckin 1001, I think we'll call it. Yep, I think that sounds good. Who else we got in here? I see everybody. Sokatano, B Team Crypto. Really quick, Crypto Ben's in the house. Man, there's a lot of people in here. I appreciate all of you guys joining us. You guys are awesome. But let's go ahead and get into the news. Then we need to get into these charts. She said close, but no cigar, sir. Back of the line. Retrain. Apologize. I'm going to go do the news. You know what? I do that well. I may not be able to pronounce names well, but I do the news well. I do well. Let's go check out the news. OC, and we'll be right back with you, bro. Where's the news? News, sir. All right, there we go. Jumping over into the news, guys. Taking a look right now at Into the Cryptoverse. What do we have here? We're looking at a crypto market cap of $3.296 trillion, which is pretty good right now. Trend average on this is $3.8 trillion. So we're still about 13.5% undervalued on crypto market cap, meaning there's still a ways to go up before we even get back to our median line. We do typically spend a lot of time above that. So let's go and check out the risk bands. We're sitting at 57.5. That makes that a DCA times 2, which today, I know DCA Monday is yesterday, but as Buck has said many times, Tuesday seems to be a better day to buy, and then actually it's ended up being weekends, Saturday, the more I look at it. Matter of fact, let's go check it out. Let's go check it out for you guys and see what is the best day to DCA in the last 6 months. So best day to DCA. Let's go for the last 6 months. So I want to jump this over to 2024, actually, because it's only 5 months in this one. So we're going to go 2024. There we go. 2024, and we're going to go, we'll set this for like November, December 1st. No, we'll go November. Let's go November. November 2024, we're going to look at this and see what the best day to DCA on Bitcoin is. We'll go with like the 15th. I put this right in the middle. Let's put this to current, and we will look at Bitcoin. Yeah, Friday. Friday has been the best day for the last 6 months to DCA. Yeah, Friday and then Saturday and then Wednesday. So you see Monday, that's the day that we put all the charts out for DCA, is actually the worst day to DCA. And how this is calculated, it's showing the percentage of move. It's not necessarily the lowest price day, but it is the day that if you DCA'd on this, it was followed by a big move, right? So not necessarily the lowest day, but the day that came before the biggest pumps, right? So yeah, right now looking like Wednesday and then Friday and Saturday is your next best bet, and then Thursday. Yeah, so there you go. That's what we're seeing there on that. Am I bullish or bearish? I'm cautiously optimistic. I'm going to stick with that. Right now, I'm feeling a little more bullish than I am bearish. But there is some warning signs that we could have some more downside anything for clicks, just so you know. Gold prices extend their gains. This just came in from Kabisi letter. Gold prices extending their gains to plus 5% since their May 15th low, nearing $3,300 an ounce as the market prices in uncertainty. And this is why I have to be cautious, guys, because we still have markets pumping in uncertainty into their feelings about the markets in general, and then gold's still pumping up and tearing off. So let's go look at my bookmarks, see what I'm got on here. Fear and greed today, guys, sitting at 71. We are in greed right now. And then retail just broke records. This is another reason that I'm cautiously optimistic. Shout out to Alex O, Crypto, the gang in the house. Appreciate seeing you, man. Appreciate the push over here, man. You are awesome. And yeah, I'm going to see him next week. So let's talk about this. FX Evolution. If you guys don't know who he is, he does amazing stock work, and he follows like dark polls and stuff like that. He's pretty good at what he does. He put this out and he said retail just broke records. Okay. So by 12:30 p.m. Monday, that's yesterday, retail traders had already bought $4.1 billion in U.S. stocks. It's the biggest midday buying spree ever. They smashed the $4 billion mark before noon for the first time in history. The dip got devoured. Here's my problem. It's retail. It's retail that's doing this. We're still not seeing the full institutional flow in. Matter of fact, we just had Jamie Dimon take a whole lot of profits. So cautiously optimistic. Are we enough to pump the markets? Yes. Are we enough to keep the markets afloat if there's any more, like if we get another negative GDP, are they officially announced like a recession, whatever? No, retail's not going to keep that afloat. So, they're buying the top, anything for click says. So yeah, I'm cautiously optimistic. I'm DCAing every week, but I am not aping in on anything. I am only like 3% in on my entire portfolio. I'm mostly sitting on cash still. Call me Warren Buffett with better hair. Just in, U.S. Senate has officially passed a genius stablecoin bill with more than 60 votes. I actually have an issue with this bill. This is good news story for crypto overall, but the one thing that bothers me on this, finally, the legal framework for the U.S. is here for stablecoins. But I went over to Chat GPT and I said, okay, let's talk about this. It says limiting big tech involvement. This bill includes provisions that complicate the ability of large technology firms to issue their own stablecoins, requiring non-financial public companies to obtain special approval from a designated committee. Okay. This is set into motion right now, and I haven't read too much into it on CBDCs, but here's where I have an issue with this is that they're limiting what companies can put out their own stable coins, right? And if that is the case, that means that they could limit who has their own stable coins. Maybe USDC and Circle gets absorbed into the United States. Then later on, I'm not saying Trump would do this. This would be under some other presidency, because you have to remember, every time a law is passed, it becomes a foundation for some other person down the road to misuse it, right? And so if they get in there and they put this as a use this bill and they go, you know what, we're going to put out a CBDC now. And then other companies are like, well, we can issue this and it can work. And they're like, no, we don't need any big tech to do anything. I don't like to see government limit in innovation at all. And this bill does do that, because while it may not limit innovation directly, it limits big tech from innovating new stable coins without approval, right? And I just think that when the government gets that far into controlling things, it opens the door for corruption under the wrong leadership. There you go. That's what I got to say there on that. Let's go jump over into the crypto bubbles, talk about the prices that we're seeing today. Bitcoin is up on the day about 0.8% right now. It creates legal precedents. Exactly, Zinzin. So yeah, Bitcoin is up about 0.8%, down about negative 0.1 today. It's about 104,600. Ethereum is just under $2,500. Let's go check out the big movers here. 2.9% upside on Tron. That's not really a big move. 3.8 on Toncoin. Whoop-de-doo. Oh, Aave. Look at Aave, guys. Up 16.8%, moving up 3 spots to number 28. We might see a move on Aave. Or we could start looking for a short. Actually, OC, pull up Aave. Let's see if this thing's poised for a short today, okay? AAVE. We'll take a look at that here in a few minutes and take a look at. See that short setup that might be there. Looking here at the U.S., let's freshy this. Let's get fresh. Get fresh. Ooh la la. All right, let's go in here and take a look at what we have here on the U.S. markets, guys. Dow Jones, S&P, NASDAQ, all in the red today to the downside. 0.22% for the Dow Jones, 0.38 for the S&P, and the NASDAQ is down 0.58%. Russell 2K down 0.28, in the VIX below 20, but green. So yeah, good, but let's stay right where you are. Let's not do too much green pump there, okay? And then down here to bonds. These are problematic. 10 years at 4.5 almost. That's not a good look at all for us. Gold getting a pump up at $3,271 today, up 1.17%. Silver's moving back up again too. Copper's coming down. That is a recessionary indicator. Platinum and palladium coming up. And then lastly, let's go look at oil. Oil is at 62.44 and dropping. See, we're seeing these recessionary indicators. Copper coming down, oil coming down. These are not good. Well, not recessionary. Contracting economy. It's a slowing down of the economy that we're seeing there on oil and on copper while gold is pumping. That's why I have to say cautiously optimistic. Because at the end of the day, we should have dumped hard on several things lately, like Moody's should have dumped the hell out of the markets. It didn't. We get news and everyone's like, this is it. The negative GDP, markets pumped. We got Moody's. They downgraded our credit rating. Markets dumped or pumped. I mean, so it's really weird what we get and how the markets move with it. So it's really unpredictable. So we could just rip off, like Bitcoin could just go, you know what, screw this, I'm out of here, and just takes off, right? Even with the stack of bad data. So cautiously optimistic is where I will stay. Let's go check out what we have here. We got the red book year over year. It just came in 5.4, was previously at 5.8. And I got to be honest, I don't know a whole lot about the red book, but let's go see what we can find out. The Johnson Red Book is a sales-weighted year-over-year same-store sales growth in a sample of large U.S. general merchandisers and retailers. So basically, this Walmart versus this Walmart a year later, same exact store location. So I'll get into that anything for clicks. Actually, I just talked about it a little bit, but I'll talk more about it in a minute. So yeah, this is down a little bit, showing that retail sales is slowing down, right? That's another contracting factor that makes me more bearish than bullish. But tomorrow we're going to get MBA 30-year mortgage rate. It's at 6.86 right now. So if you want to buy a home, that's what your mortgage rate is, average. What else we have here tomorrow? We got oil. Thursday, we're going to get into continuous jobless claims. That is going to be people that filed for unemployment this week. And then we're going to get into home sales, and that's it, guys. Very quiet week this week on the economic front. We are looking right now, guys, 94.8% chance of no rate cut this coming month in June. Let's look at July. July is 71.2% chance of no rate cut. September is now a 30.9% chance of no rate cut. October is 14.4. That's where we start to see the. Okay, good. So yeah, guys, they were talking 4 this year. I'm actually thinking 1, maybe 2 this entire year. So Trump tariffs. This is another article that makes me a little cautious. Caution's the word today. JP Morgan's CEO Jamie Dimon says markets are too complacent on tariffs and expects the S&P earnings growth to collapse. Let's go down here and take a look at what he's saying. CEO Jamie Dimon said Monday that markets and central bankers underappreciate the risk created by record U.S. deficits, tariffs, and international tensions. Dimon, the veteran CEO and chairman of the U.S.'s biggest U.S. bank by assets, explained his worldview during his bank's annual Investor Day meeting in New York. He said he believes that the risk of higher inflation and even stagflation, which we've talked about many times here on the show, aren't properly represented by the stock market values and staged a comeback that have staged a comeback since the lows in April. We have huge deficits. What I consider almost complacent central banks. You all think they can manage all this. I don't think they can. My own view is that people feel pretty good because you haven't seen effective tariffs. The market came down 10%. It's back up 10%. That's an extraordinary amount of complacency. And actually, I'm going to even correct that article, OC, because the market hasn't just recovered 10% after a 10% pullback. If you have a 10% pullback, it takes a 20% pump to recover. So we've seen double the money inflow that it took to sell off because it takes twice the volume, really, minimum, to really pump the market. So, for example, 50% pullback on something requires a 100% move to retake levels. So, I don't know. What do you think? Is Jamie Dimon here, OC? Is he right? Are they being complacent? Is there issues and cracks, and all these people are just like walking over on this road that's crumbling around beside them, and all they can see is, well, there's a road behind me. So obviously there's a road still going forward, despite the crumbling earthquake of reality around them. What do you think? What's your thoughts on this?
I think reality is hard, right? It's gonna hit hard as always. The only thing that we can do is, like, if you don't know if that is the place or not, it's just look at similar patterns, right? And be, of course, cautious. What I would say at this point is that, all right, if it, I don't know, if it smells like a cat, it does meow and then jumps like a cat, well, I guess it is a cat, right? Is you still thinking that might not be a cat? Well, then you can just go patiently optimistic, I would say, or cautiously optimistic. But other than that, I mean, if reality is telling you something, I'd rather go with the narrative, because usually that's where most of the machinery of society or in politics push to, right? Which economics follows. So I think that's what I think.
Okay. Yeah. So we had the question. So I was asked by Anything for Clicks. He said, "Why am I cautiously optimistic?" And so, and I think he actually said bullish. Did he say bullish and then slash cautiously optimistic? I think he did. I'm not bullish. I am cautiously optimistic. My bias is higher for now, and I do believe it's because we just keep rebounding. We had the GDP, which I brought up. We had the GDP that was negative. We pumped. Negative, a shrinking economy, contracting economy, recessionary, 50% indicator, right? We pumped. We got downgraded credit rating. We pumped. It just doesn't matter what happens. We just keep going up, which I do believe is going to make the collapse even more pronounced when it does happen. But as of right now, I think that the potential for retail to continue the markets to go up is pretty good. I think when it all starts to fall and they all become exit liquidity, then we will see a a really hard fall to the downside, and I'll be prepared for it. I mean, if I say I'm cautiously optimistic, but I'm sitting on 98% cash, am I really bullish? I mean, no, I'm prepared for anything, but I am going to spot trade. I'm spot trading this basically with my DCAs because we can make money going up or down. I'll make money on spot, and then I will because right now people are enjoying the money that they're bringing in. People that are still in the markets right now, anything for clicks they're taking the money and running. But when it does fall, then we'll see what happens. With retail money and the institutions. So, I mean, at the end of the day, nothing's changed. We still have. I think Piper would notice if I take a seat in the back of the class. Yes, Wick's wife fine. 89, 2 dub. You can't walk in a room without being noticed, lady. But yeah, I think at the end of the day that nothing's really changed. We still have cracks in the economy. We still have cracks in the dollar. We still have weakening of the economy. We still have unstable labor force. So I don't think that we've had enough change to fully flip the script to a bullish state, to a bullish nature. I think that we do have the setup for it, but it don't have an engine on that car yet, right? So as of right now, we need to wait and see. So cautiously optimistic. Yeah, that's where I sit. Let's go over and talk about this chart though, and then I want to come back and take a look at OC's chart. This is the chart that's really making me get to the point where we're cautiously optimistic. And it's because we're getting back into our golden pocket here. If you take a look at these levels that we've hit in this golden pocket, 618 to the 0.66, which is a GAN level. And then we return back down to platinum pockets, right? We had one outlier here back in 2017 that took about 75% above that range. But beyond that, that golden pocket 618 has been solid, like a rock star. I had this up, and this is pulled from trend-based fibs, low to high to low. I had this up months ago, talking about this would be the top, and I'll get out in quarter one based on time. If you guys want to see why that was, time base, where are we at? Top breaks, there we go. So let's go take a look at this, and I'll show you why quarter one and why that price range. When we take a look at when price action breaks previous cycle highs and then measure that, first cycle here came in at 273 days right there. Okay. Then we set our high. We break our high price level. We measure that. That's 285 days. Okay. Break that high there at that level. Oh, sir, don't do that. Lock your fibs. Lock your fibs. Thank you. We come in at that level, look at that where we break, and then we measure that off. It's 342. If we take the average of all of these time frames and run that average, it came out to 300 days. And if we look at the 300-day mark to from where we broke that out, where's it doing? It puts us in about January. And so that is why I sold in January. On top of that, it also hit this historical 618 range. Oh, hit this historical 618 range right here. And now that is historically been in a area of our top. However, I did say last week that if we do break this level, we had a lot of resistance on it. If you take these are 3-day candles, you can look and see how much resistance there was to get a candle close back above this level. Now we have done it. We had one pump up here. This happened on this weekend, and then we have this level that is holding as support. Now, if we can get this to show support and then get ourselves up from this level, right? Then we have to assume that we're looking at these fib cycles here. And if we look at these fib cycles, let's bring this down. And for those that know all this, I apologize, but I get asked these questions. And so there's a narrative that all needs to be addressed, right? If we take a look at this, historically, we've always at least hit the 1618, sometimes going up to the 236. I don't know that that's necessarily possible or even reasonable. I know it's possible. Anything's possible, but I don't know that it is reasonable this cycle. We've been getting less and less on the return. So I'd be happy with the 1618. We get up into here. get our bounce and move to that 1618 this time, guys, that's $166,000. And that is where I get that $166,000 target on Bitcoin. But it all depends on what we do right now in this area that we're in. So I just wanted to talk about that. Shout out to Alexandra G. She just said, hey, we got a lot of people watching and they are not smashing the likes. So
pump those numbers up. Those are rookie
I hate
numbers
saying
in
it.
this racket.
It's annoying. I know you guys hate hearing it, but it really honestly does help the algorithm greatly. So appreciate it. If you guys smash that like button, get us up there. We had other people right now. We got I think 113 on here, 109 on here, and we got 153 total. So we got almost 50 people watching us on X right now. Also, shout out to everybody watching us over there on Crypto X. We appreciate you. Don't forget to come over here and drop a like and let us know that you're here in the show. I appreciate you all. All right, so OC, I just went over the whole bullish and bearish narrative. Like, we are at a top range. We could reject from here hard a third time in this golden pocket range. Here, I'll pull it up while I'm talking about it. We can reject on this hard, right? But we could also launch off of this thing like, you know, a SpaceX freaking launch pad, right? Straight to Mars. We go. What are you seeing on the charts? What's your bias feeling like right now? Are you, on the higher time frame, what is your focus on Bitcoin? What does it need to do to continue higher, in your opinion? And what would be your trigger to go, you know what? This is it. It's over. Let's call it what it is, and let's wait for our next bottom. Use our MVP oscillator, catch the bottom every cycle. Let me see on your chart what you got, and you can walk us through all that.
Absolutely. So very quick, I know it's a little spaghetti-ish, but I don't want to remove that many things in here because we've been following along this movement. This is on the 4-hour and this crumbling. So let me just hide it for a second, all right? But let me show you first, and let me just get rid of this in a second, that we are getting back at the areas of rejection, all right? So we have that bullish flag, we have a breakout, kind of like a very shaky breakout, right? But also, as yesterday, Alex O Crypto mentioned that we have a very bullish breakout on the monthly candle. There we go, and it is actually a very bullish breakout on the monthly candle. So, well, we have a second candle here with what it seems to be a doji here, usually called for reversals or continuation with strength. So let's get back to daily before I say we are going to the moon. Something important, it is what has been happening right down here, all right? And let me turn on all of my spaghetti at once, all right? This is, and let me just get rid of this box because it's already done, all right? This has been a matter of study or subject of study for me since we were somewhere around February the 20th, all right? And if you take a look at, I have a couple of blue candles in here. These blue candles are exactly as for this part in here on the 4 hours. Let me take a look at it very quickly. Not in 4 hours, sorry, it was on the daily. Here it is, sorry, I almost lost it. So basically, this blue candles are the exact copy of this part right here. As you can see, going downwards, breaking through, retest, then a big pullback for the first dead cat bounce, all right? And then finally, the double top and reversal for the secondary top. Remember that at this point, we are looking to have the same patterns in here, which is an uprising wedge as we have more market cap. My theory here, based on what happened with gold a long time ago, it is that as we break into the big boys market cap, if we can call it like that, that is when we start consolidating at the top, right? Making a bearish pattern at the top, usually a rising wedge that ends up breaking downwards, all right? And we can see that all over the place, right? So it will make sense that as we are increasing in market cap, we try to make it until that market cap fails. And what do I mean with that market cap fails? Remember, the more market cap usually indicates the more people there is, right? So as diamond hands, there's only few of us that has diamond hands or diamond brains that really hold it across the whole thing, right? Even, right? Even us are trying to sell when we're breaking big supports. And I'm not saying selling, getting rid all of your Bitcoin, but the bulk of your Bitcoin, so you can re-enter when we start breaking back above some areas of support, right? So you basically skip this drop, you lock up your value here, and with this value, you re-enter. You re-enter right here and keep building up that value, right? I mean, that is part of trading, even DCA strategy, right? So even diamond hands, now that we know that selling is not getting rid of all of your Bitcoin, just a part of proportional Bitcoin that you're destined to trade. All right. So basically, everybody's selling here. The more market cap we have, the more people holding we're going to have. The more people that we hold, the next rally we're going to have, if that makes sense. So as you can see here, people try to hold, and we did not hold that door holder, right? So what happens here, or what is happening here, is that I think that we are repeating this pattern. In fact, if we go closer, we're going to be seeing the same pattern playing out over and over and over. We're going up, we break down, right? And then we go back up, we break down. And what am I talking about with going up? Look at that megaphone pattern, that same ranging up pattern, right? That happens here, right? Ranging up pattern, that megaphone pattern, and then breaks down. Well, in this case, it was not such a megaphone, only if I start looking at like maybe like that, right? But let's not go that route for now. So, and then if we start looking at the same patterns, well, then they start increasing that little range, right? In this case, was a megaphone pointing downwards, and then we break to the upside, right? What meant that right here we had an influx of market cap. And be aware that that was almost exactly the same place that we have the previous influx of market cap that held down here. All right. So if we are together in the same page, that means that right now that we are basically at the top, because we already have measured that this should be at least twice of this movement, and we're already in topping areas, we could be looking something like that. All right. Something like that. And then it will make sense that it's much bigger than this all the way here. Or if it's not bigger in size by height, might be bigger in size by length. All right. And then breakdowns. I think that we're going to be start breaking out maybe somewhere around here. Having said that, this is just a theoretical pattern based on what I'm seeing. Both the ranging down here, which is not the beginning of the bear market. So they're teasing us by market cap, because now we are skipping part of the cycle that we have seen on Bitcoin and jumping into the same thing that happens with gold ETF, right? Which are these kind of patterns that prolonged the bullish cycle and then created another bearish market after ripping everybody else. All right. So having said that, let's zoom in and try to predict, right, what's going to happen here. Not predict. Well, then I rather call it speculate, right? So as we can see, I was expecting a little bit of a higher, longer ranging here. It did not. It went faster and bigger. That means more market cap. All right. Jumping in. And then look at what's happening here. We're having the same patterns that we revisit all the way down here, right? So we have that upper megaphone or range breakdown, and then further continuation to the upside. So we have the little breakdown as we were expecting in here. So basically, this is mimicking the same part, right? And then what happens? We make a rally. How many points of stop we have? 1, 2, below off top, all right? And then big retracement to big support and continuation. So what are we expecting at this point? One, what is the second one? Maybe we can have it somewhere around here. 1, 2, then the blow off top at my red area here at the top of this trend line that we have, and then possibly a reversal. Don't get me wrong. I believe this reversal is going to come sooner or later. If I can guess, it's going to come sooner. Why? Because we have seen the breakout happening sooner than we were expecting. We also saw this pattern happening sooner than we were expecting. And of course, we're seeing these things happening sooner than we expected based on the previous cycle. All right. So at this point, just to wrap it up, I believe that we could be breaking some stuff to the upside. My target at this point is 109 to 115 for then looking for a big retracement. I don't think that's going to be the end of the story. I just think that this is going to be a big retracement. All right, and let's measure it just so we have a basic overview somewhere around 17. In fact, it's going to be a little bit higher, smaller, something around a 15% retracement, and that also coexists not where the dynamic reactor is at, but where is it going to be if we keep pushing higher. All right, nonetheless, remember, this could be happening a little bit earlier like this, and let's keep it as is right now between the actual pattern following and the earlier pattern following like that. What does that mean? Look at what happened in here. Right here, we have cloud compression at the top. Not only we have cloud compression, we have two bearish divergences, right? When it all went to whatever to whatever he had to do at the breakout of that trend line. All right. Yeah, I know we have a secondary double top, and then off we go and stood all the way below until this point. Let's go back and analyze once again what happened here before we went below. Again, double bearish divergence and lose of that zero line, right? And finally, what happened here before everything else went once again to the downside? We're analyzing this versus this and this versus this, all right? So we were above, perfect, and we have that breakthrough, that zero line, and then we stood below with some, and this is exactly the point that I'm looking at, guys. If I could give you kind of like the holy grail, this is, or the holy grail, let's better call it that because we have rips in the chat. So I'm looking for the oscillator be at the top above the zero line, started hitting reversal zones and not being able to break to dynamic reactor. That's it. For me, I'm out. I'm selling what is destined to be sold, and then I'm retracing to start looking for our DCA plan. Remember, guys, that we have a Discord DCA plan. So let's just check it out very quickly. And of course, this is for our members. I'm not going to be revealing what it is right now, but you can basically go into Bitcoin DCA plans or altcoin DCA plans. And I want to watch in there what is being added to at these areas. Most likely that's going to be a ×2, a ×1 DCA plan. And then when we start getting DCA ×5, that's when I start rejoining seriously. So basically that's what I got, Piper. I think that's what's going to happen and played out based on not only gold when the ETF was released, but also based on the previous cycle of Bitcoin by market cap.
Yeah, that was great analysis. That's why I threw the fire up there, and I love Holy Grail because we got ribs. Rib chat, guys, rib chat. So my passive freedom just says, so bearish in here or what? Prepared. We are prepared to go either way. Right now, we are at major resistance. We are at the time frame of pullback, but it's hard to be fully bearish when you have articles like this coming in, guys. This is off of CNBC, just came out moments ago, and this is the S&P could return. This is according to Bank of America. The S&P could return to record highs as sentiment improves, Bank of America says. And right now, sentiment is what is really moving the markets. The macro data comes out, people ignore it, they drive on, right? For the moment, it seems stocks can't be stopped. The S&P eked out a small gain on Monday, extending its winning streak into 6 days after reversing a decline sparked by Moody's downgrade of the U.S. debt. The advance added to the benchmark's rebound off the lows that followed the April 2nd tariff announcement. Since reaching the April 7th intraday low, the index is up more than 23%. So what's next, if history is any indication, is an extension of this bounce, which could take the S&P back to all-time highs. And I do think that's exactly what we could see coming in on Bitcoin also. Matter of fact, I got an article here and I want to talk about this. OC, can you pull up the golden cross, and this is what was on the thumbnail today. This holy bull right here, holy bull for holy balls, holy balls for holy bulls, I guess. Shout out to Alexander G. Drop those holy balls in the chat there. Let me get a couple in here. I gotta get the holy balls in there. There we go, holy balls. Bitcoin is signaling a golden cross. What does it mean for the Bitcoin price? Most recent Bitcoin Golden Cross. Most recent Bitcoin Golden Crosses have triggered major rallies, though not without a notable failure like we saw in February 2020. It was a bull trap. Bitcoin is nearing a golden cross that has led to a 45 to 60% price rallies in the recent past. Fundamentals like rising M2 supply and easing trade tensions support a bullish outlook. Bearish divergences and overbought conditions still show there's a risk of Bitcoin falling below 100,000 though. See, prepared. We're cautiously optimistic. Yes, there are a lot of things that say this could continue higher if we continue on this trajectory and the sentiment remains bullish the way that it is. But overall, we are seeing that there is let me get myself even there. There we go. That we are seeing that there is a chance for more pullbacks, which is what OC was just talking about. Benjamin Cohen, Bitcoin's golden cross should occur in a few days. We'll probably make a video soon discussing this. Shout out to him and Into the Cryptoverse. We use it for a lot of our DCA plans in our community. So that's all pinned in the chat below if you guys want to check it out. As of May 20th, Bitcoin's 50-day simple moving average was eyeing a close above the 200-day simple moving average. So it's the 50-day simple moving average and the 200-day simple moving average for the first time since October 2024, forming a golden cross. Historically, you can see here, golden cross moved to the upside. Could have happened right here, and that's the price level. 40, almost 45% upside move. And then we had it again that happened right in here. And that gave us a 62.7% move to the upside. So guys, just looking at that on the chart, for a 40, we'll just do the 45. We'll talk about that one. Let's go turn these off. Get out of here, Fib Cycles. Thank you very much. Let's go pull a 45%. Do I have my moving averages on here? MA ribbons. There we go. And then I want to go in here. That is I want to turn on the 200 day, and we'll make this a 50. There we go. And I want the 50, and I want this on SMA. SMA, and I need this on daily. There we go. So there's our daily 50, which is going to be blue, and our 200 SMA, which is going to be orange. Okay. And right there is what they're talking about. Looking at that. So OC, what are you seeing? Are you seeing the same thing on these levels to the upside historically that they're seeing there? And a 45% would be 135. A 60 or 70% there would be about 150. So let's jump over to your chart. What are you seeing on the SMA?
S&P, perfect. Let's take a look at first, because I already have it, the area that I'm looking at Bitcoin, because that is where I compare it to. This 109 to 115, which from here it is a 10.88%. All right. So just because I had it right here, the areas of, there we go. And this is not the 15 minutes. I'm looking at the 6 hour or the daily.
Well, no. This is a golden cross on Bitcoin they're talking about. They're talking about the S&P could go return back to all-time highs, but looking at Bitcoin, we're about to hit this golden cross on Bitcoin off of the 50 to 200 day. And they're talking, on that chart, in that article, just to refresh it, because you were checking out some other stuff, 62.7%, 45 to 62.7%. Those levels, are you seeing anything for projections on those that could give us, further targets to the upside besides that 150?
Oh, absolutely. In fact, I just moved it. In fact, one of my targets here is 118. It's not that big, but we still need to understand that we are following the same growth pattern, which usually shrinks down. A quick way to do this, if you want to do it at home, just for example, look at the base of the next pattern in here and then compare it from the base from the next growth, and then look at the difference. Usually the first one is going to be bigger and the third one or second one is going to be smaller. So far we have a difference of let me just bring out my calculator very fast, because today I don't have coffee in my brain. That will be it's 221 minus 189. All right, so I'm just taking the difference percentage, and that's a 32% of a possible both growth or shrinkage, right? We still don't know, but that is the variable that we have so far. So what am I going to be doing? I'm going to be first taking a look at the worst case scenario, which right now, let's keep it back. Sorry, the back of our head, 32. All right, so that will be 189 minus 32, because at this point we're expecting a shrinkage, right? And that gives us a 157. So what I'm going to be doing, it is grabbing this one, pulling it from here, which is the low, and remember doing a 157, and that is just getting out of hand, man. Oh, and I'm going to be explaining why in a second. 157. There we go. The issue in here, it is that we are not considering not only the shrinkage, but also the size where this happens. So basically the market cap. So as we had, for example, this pattern here in growth back and forth, well, then we also need to measure that. Remember, this was a 235 from all the way to 25, all right? So there is a factor in here that we're not considering. So if you want to do this at home, remember just not to add them and subtract them. What we're doing instead, or I mean, we can do that if we are on logarithmic, all right? But if we're not on logarithmic, what we're going to be doing, it is just measuring, for example, the size, not by percentage, but by actual size of difference. Let me show you here. For example, right here, and there it is. Why can I? There we go. This is now the same thing that we did, and we're going to be grabbing another one in here, just make a different color, and this is going to be our different size. All right, so what we do is just basically grab it for the worst case scenario and put it back down here, and then shrink it, and there we go, our next possible movement for the worst case scenario will be 129, and then our worst case or our best case scenario with that shrinkage would be somewhere around 134. So basically, remember, just don't add the percentage because they change, because we're not on logarithmic. Just better do it geometrically, and you have a much better estimate that than just adding the percentage here, because that it has to do with the market cap influx that we need. So yep, that's what I got. My targets are somewhere around 133 for the best case scenario.
Awesome. Yeah. People in the chat no longer want you to ever use the word shrinkage. It's the most feared word in the English language. And I said Bitcoin's a grower, not a shower. And then I realized I've heard that statement many times, but I've never seen it written out. Shower and shower. Bitcoin's a shower, not a shower, not a shower. So shout out to everybody in the chat, man. Love you guys all. Someone said Bitcoin does not need the blue pill. There we go. Interesting. You were talking about these levels, right? And so I was like, I got this trend-based fib that I've been using for the top cycles coming in, right? These are based off of cycle low to the next cycle all-time high, back to the next cycle's low. Something interesting when I go in here, let's just go throw on the 50. And I want to show you guys how much this level played out. There's our March 2024 top that we pulled back about 50% on, okay? And you can see it was amazing resistance. This is a trend-based fib extension that, again, takes place from the low back here, all the way down in here to the top of 2021. So we had the top here for the second point down to the low here that we had in 2022. Okay. So trend-based fib extension, that's how you build those. Okay. 3 points of data. You find those right over here. It's trend-based fib extensions. Okay. if you look at the golden pocket for the top, which is typically what we do, look at the 50 and how much it was for support. And I'm like, okay, well, if the 50 played out, how does the platinum pocket play out? And we know the platinum pocket plays extremely well. Let's go just check out these levels. That's your 786 to your 887. Guys, that would put Bitcoin on the 786 at 173. Okay. And so from a move from here, let's just go measure that up. That's a 63% move. That's in line. That is in line with what we were just talking about on a golden cross pump. I want to put that out there. Like 173, we go over and we look at the fib cycles where it's coming in right there close to that. And that's a whole different pool of trend-based extensions that we've hit historically. So I really do think that if sentiment continues and we keep denying what we're seeing over and over and over again, like, hey, macro news, this is bad, this should sink the market. Nope, it's going to take off again. Guys, we could be looking at like $170,000 as our target range, and that would be in line with what we're about to see with this golden cross. So I just wanted to break that down for you guys, give you a little bit of hopium. But look, at the end of the day, we're doing the DCA weekly. Feeding your winners is never a bad thing. Feeding your winners and cutting off your losers, right? So if you've got things that aren't making you money, you might want to relook at your portfolio and consider swapping some things around. And then just DCA is the way when it comes to movers to the upside. Me personally, when I get a contraction, a shrinkage, pullback on a alt, right, and it continues to break. When it hits that 10% threshold, I'm out, right? I close it out. I don't want to keep holding something that may end up being, a $3 Cardano that never sees $3 again. So being aware of cutting my losers loose. You guys are not performing for me. You're out. You're fired. Trumping those altcoins. You're fired. And then feeding the winners. That's how I approach my DCA way. So, looking at this, what we're seeing right now, I do think that we can, expect to see, if we do have a continuation of that bullish momentum, that 786 being hit. So, each cycle has its own pattern. Absolutely. Yeah, they don't repeat exactly, but they definitely have some things that do happen over and over and over again, just like the time frame, time-wise, how that works out. So we've topped within that range of time every cycle. So, but I do think this cycle is a little bit different, quite a bit different, because we do have the institutional retail coming in through the ETFs, and then also the fact that most retail on the TradFi side don't just buy and sell. They buy and then they buy more at the dip, right? And then they're long-term investors. 401ks tend to hold for a while. So shout out to My Passive Freedom for that comment. Appreciate you. Reggie Classics in the house. Hang on. My missus doesn't make me money. Quite the opposite. So, okay. Nice. Oh, see, are you okay today, bro? You need coffee. You need OJ in your coffee. By the way, I heard you yesterday, just so you know, say, look, nobody said anything. So let me make up. 24 hours ago, I screamed at my radio in my car that OJ does not belong in coffee, just so you know. Is there anything else on the news side here that I wanted to talk about? We got the Genius bill. We talked about that. We talked about the Bitcoin Golden Cross. Oh, here you go. You want a reason? You guys want a reason to be a little bit cautious right now? Here's your reason to be cautious. Jim Cramer tells investors to tame their market fears. This came from Jim Cramer. CNBC's Jim Cramer urged investors on Monday to tame their fear in the face of the Moody's downgrade. He recalled the S&P's downgrade in 2011 and Fitch's downgrade in 2023. If you guys don't know, we've had 3 downgrades now. Moody's did it recently, but we had the S&P downgrade us in 2011 and Fitch did it in 2023. So this is nothing new, both of which were followed by market declines. Like, those previous two. Friday's downgrade from Moody's prompted more fear than the short-term economic environment merited, and Monday's trading day opened lower. Treasury yields spiked following Friday's announcement from Moody's at session lows. Dow Jones Industrial was down 300 points. Kramer said that investors are conditioned to be fearful. Friday's post-close downgrade was just that, a get-out-now story that spooked investors into selling out of a perfectly fine portfolio. So there, you want a reason to be a little bit bearish. Jim Cramer said, be bullish. You'll be okay. So, yep, Jim Cramer, always there. All right, guys, it's about all we got time for today. We appreciate you guys being here. We're going to be back here tomorrow morning at 10 a.m. If you haven't done so yet, smash that like button. Share this with a friend because sharing is caring. If you guys got any value out of today's content, we're here every day, Monday through Friday, 10 a.m. Next week, while I'm in Vegas at the Bitcoin conference, first of all, anybody that's a member here, if you got that membership there, guys, we're going to be doing a meet and greet at the beer park at the Paris. We're going to be having first round of drinks is on me for all members. And then we're also going to be having some appetizers and some ribs, rib chat, hashtag rib chat. But I would love to meet you guys there. And for the morning show, I'm going to be doing a down and dirty quick 15-minute what to expect for the day next week for those shows from the casino in Vegas. Not the casino floor, obviously, but at the Paris where I'm staying. And then at the OC will be doing the normal show and all that stuff. I don't know what BC's doing because he's going to be out there with us too. Don't know what LBC is going to be doing because he's out there with us too. You might be the only one, OC, that's on a normal schedule next week because you did not get your visa and come join us in Vegas. But yeah, we are still going to be doing a live stream. It will be a live stream, Zen. I'll be doing a live stream show in the morning, a quick down and dirty. Here's what's going on with the markets, guys. Here's some hot topics today and yesterday from the Bitcoin conference, so on and so forth, stuff like that, guys. But yeah, we'll be keeping you guys up to date, trying to keep some type of familiarity with our normal schedule. But overall, yeah, we expect a little bit different next week. But I would love to see you guys all next week at the beer park at the Paris. I'd love to meet everybody that's here. Much love to all the alumni. OC, thank you very much for covering for me yesterday, but it is time to head out of here. You got a class to go do, and I think we're about to head over and see Crypto Princess. So you guys take care, trade safe, and as always, please use some risk management, OC. Alumni, I'll catch you guys all tomorrow at 10 a.m. Peace. I don't know what they keep telling me. I don't know.